$315 trillion. That's not the world's GDP, that's the world's debt. We owe 3 times more than humanity produces. Every year, every country slips deeper into the red, and no one stops it, no one questions it, no one even tries to fix it. Why? Because this isn't a system that broke. This asterisk is asterisk the system. A system designed over centuries that now controls everything from your rent, your taxes, your currency, and even your government's survival. And here's the part they never tell you. We can't get out, like ever. Today's global economy doesn't run on productivity or savings. It runs on debt, on rollover, on promises that can never be fulfilled, and obligations that can never be erased. To understand how we got here, you have to go back 330 years, to the moment debt stopped being temporary and became the operating system of the world. And once you see that point clearly, you'll never see the world the same way again. Before this system existed, debt lived and died like everything else. A king borrowed for a war. The war ended. The treasury ran dry, and the debt was either repaid, defaulted on, or forgiven. Debt had limits. It had consequences. Debt could break a kingdom, but it couldn't outlive one. And then, suddenly, it could. The 1690s were a nightmare for England. France was crushing them in the 9 Years' War. The treasury was drained. Soldiers weren't being paid. Supply lines were collapsing. And worst of all, nobody wanted to lend England money. Why would they? England had defaulted before. People remembered. Trust was gone. England wasn't just losing a war. It was losing its credibility, its solvency, and its ability to survive. Then, an impossible idea appeared. Before he ever stepped inside the halls of power, William Paterson was an outsider. He wasn't a noble, a general, or a politician. He was a merchant's son from rural Scotland, a man who had spent years traveling across Europe, watching kings beg, borrow, and collapse under the weight of war. He had seen wealthy nations crumble because their credit broke. He watched merchants lose fortunes because monarchs defaulted. He had witnessed entire economies freeze when trust evaporated overnight. He sat in smoky London coffee houses, listened to merchants whisper about royal defaults, and watched financiers panic every time a king broke his word. And then, Paterson realized something no one else dared to think. The problem wasn't debt. The problem was that debt ever had to end. If you could make debt permanent, you could give a dying empire a heartbeat that never stops. So when England finally reached the edge, when the treasury was empty and the war was lost, Paterson stepped out of the shadows with an idea that sounded like madness or genius. He walked into the chamber with a proposal so radical, so unthinkable, that most men would have been terrified to speak it aloud. And now, standing in front of the most powerful people in England, he finally said it. You don't need to repay your debt. Not now, not ever. You'll borrow money, and instead of paying it back, you'll pay interest forever. It should have been insanity. It should have been rejected instantly. But desperation makes the unthinkable look like hope. So in 1694, England said yes. And with that single word, the modern world began. To make this new kind of debt possible, England needed something it didn't have. A machine to manage the debt, to keep track of the interest, to guarantee payments, to turn eternal debt into usable money. So they created one, the Bank of England. But this wasn't a central bank like the ones we have today. It had no monetary policy, no inflation target, no price stability mandate. The Bank of England's job was brutally simple. Fund the war, keep the interest flowing. Don't let the machine stop. Here's how it worked. A group of wealthy merchants handed over their gold, about £1.2 million. The new bank then lent this money to the Crown. In return, the Crown promised to pay 8% interest on that loan forever, with Parliament guaranteeing the payments. But here's the twist no one saw coming. The merchants received banknotes as proof of their perpetual loan, and people started using those notes as money. Think about that. This was money that paid interest, money backed by government debt, money built on the promise of an eternal obligation, and then the alchemy began. Debt turned into currency. Currency turned into debt, and the line between them vanished. England didn't repay that £1.2 million. It couldn't, and more importantly, it wasn't supposed to. The debt wasn't a burden. It wasn't a problem. It was the foundation of a new system. A system where debt is permanent, interest is eternal, borrowing has no finish line, and governments never face the moment of truth where the bill comes due. Because the bill never comes due. This was the era's greatest invention, immortal debt, a form of borrowing that lives longer than the politicians who create it, longer than the wars it finances, and longer than the generations who are born owing it. This is why British government debt has never been repaid. Not once. Not in 330 years. It has only been rolled forward, again and again and again. And you can bet other nations noticed. Within just 50 years, the entire continent transformed. France created its own funded debt system. The Netherlands formalized its government bond markets. Even the new United States, barely a country, copied the model almost immediately with Alexander Hamilton's financial plan. Why did everyone jump on board? Because permanent debt didn't just finance war. It became the credit line for civilization itself, funding roads, bridges, navies, empires, colonies, and the entire industrialization of the modern world. Europe stopped thinking of debt as a burden and started thinking of it as a battery, a source of energy, a source of power, a source of infinite leverage. This was the moment debt became structural, the moment it became normal, the moment the machine was born. But this was only the beginning. The simple promise of eternal interest would soon evolve into something far more complex, far more powerful, and far more dangerous. The next stage of this evolution would take this perpetual debt machine and connect it to every single person on the planet. Thanks for watching. If you found this interesting, be sure to subscribe and hit the bell so you don't miss the next part of this story. See you in the next video. The globalization of debt. Before the word globalization existed, 1815 to 1913. The first era built the machine. The second era connected every nation to it. By the early 1800s, Europe had adopted England's invention, permanent sovereign debt. But something new was happening, something no government fully understood. Debt was no longer just a contract between a state and its citizens. Debt was becoming a commodity, a tradable object, a global instrument of power, and the consequences would reshape the world. The Industrial Revolution supercharges credit. As the 19th century began, the world entered the greatest economic shift in history. Steam engines, factories, railways, steel, coal. Suddenly, governments didn't just need money for war, they needed it for everything. Roads, ports, telegraphs, colonies, trade routes. The modern world needed a modern financial bloodstream, and sovereign debt became that bloodstream. But this time, it didn't stay inside national borders. The machine was growing new limbs. Capital starts crossing borders. British investors bought French bonds, French banks bought Prussian bonds, Prussian merchants bought Russian bonds, Russian aristocrats bought American railroad bonds. Money was crisscrossing the continent, and eventually the world, at a scale never seen before. For the first time, a government's debt wasn't just owned by its own people, it was owned by everyone. This was the birth of global finance, long before the word globalization existed, and it created a new reality. If one country defaulted, everyone felt the shock. A crisis in Vienna could bankrupt a bank in Paris, a panic in New York could wipe out investments in London, a collapse in Argentina could destroy lenders in Germany. The world economy had become a chain of promises, and every link was tied to another. The rise of the financial class. As debt globalized, something else emerged. A new elite. Not kings, not emperors, not generals, but financiers. People who didn't rule nations, but ruled the flow of money between them. Merchant banks became empires. Bond traders became kingmakers. Information networks became weapons. And in this new landscape, something subtle but devastating happened. Power shifted from governments' gives to the people who managed their debt. Because if your government needed money, you needed those banks. If you wanted to build a railroad, you needed those banks. If you wanted to fund a war, you needed those banks. Nations started to behave like corporations, and corporations started to behave like nations. The machine was growing teeth. The secret weapon, liquidity. And then, governments realized something shocking. Your debt didn't have to be safe. It only had to be liquid, tradable, transferable, easy to buy, easy to sell. If investors could exit quickly, they would enter quickly. This created a new financial law. High liquidity gives high trust, gives unlimited borrowing. Britain mastered this. Then France, then Germany, then the United States. By the mid-1800s, debt wasn't a burden. It was a business model. Nations discovered they could run deficits indefinitely as long as their bonds were liquid. This wasn't just economics. This was psychological warfare. Governments seduced global investors with one promise: you can always sell our debt. It worked. Money poured across borders like water flowing downhill, and with every drop the machine grew stronger. Era 2 ends with a new world, the financial planet. By the time the 20th century arrived, something irreversible had happened. The world had become one interconnected financial organism, and sovereign debt was the bloodstream. Every nation had plugged in, every bank was a node, every crisis echoed across continents. Era 2 ends with a haunting truth. Once money goes global, no nation controls its own fate. The machine now had reach, it had influence, it had interconnected destiny. And in the early 1900s, it was about to evolve again. From a global market into a global throne. A throne that only one kind of institution could sit on. Not a kingdom, not an empire, a central bank. The central banks in Fiat power 1913 to 1971, when money lost its anchor, and governments built a new one. Era 1 created the machine. Era 2 connected the world to it. But Era 3 did something far more dangerous. It gave the machine a brain, a heart, and the ability to create money out of nothing. This is the era where money becomes political, where crises rewrite the rules, where governments and banks merge into one organism, and it begins with an event so catastrophic, it forced nations to abandon centuries of economic tradition. World War I, the war that shattered the old order. In 1914, the global financial system was still chained to a simple rule: gold equals money. Money equals gold. You could only print currency if you had metal to back it. It wasn't perfect, but it restrained governments. It kept a leash on the machine. Then the war came. Millions mobilized, artillery and munitions, railways and supply lines, hospitals overflowing, and no country had the gold to pay for any of it. So they did something unthinkable. They suspended gold convertibility. They printed money backed by nothing but desperation. They borrowed on a scale no one had ever imagined. By 1918, the world had changed forever. The machine wasn't built on metal anymore. It was built on trust, the most fragile substance in economics. And once trust replaced gold, you could never truly go back. The birth of a new power, the modern central bank. In the middle of this chaos, a new idea emerged. What if money didn't need gold at all? What if money needed something else? A manager, a guardian, a centralized brain. This is how the modern central bank was born. Not as a place where gold was stored, but as a place where policy was created. Interest rates, liquidity, stability, open market operations, lender of last resort, tools kings never imagined, tools empires never dreamed of, tools that could reshape entire economies with just a meeting, a memo, and a single number. In 1913, the United States created the Federal Reserve. By 1920, most major nations had built their own versions. By 1930, the world was run by them. For the first time, the system had operators, people who now had power to decide how much money should exist, how cheap or expensive borrowing is, who gets bailed out, who's left to fail, which banks survive, which currencies collapse. This wasn't economics anymore. This was power. The Great Depression. When the machine broke down, in the 1930s, something terrifying happened. The machine malfunctioned. The stock market crashed. Panic spread. Credit froze. Banks collapsed. Factories shut down. Millions lost their jobs. Currencies collapsed like dominoes. Governments tried to fix it the old way. They cut spending. They tried to return to the gold standard. They tried discipline, and everything got worse. Entire countries faced starvation and revolt. So governments made the most radical economic decision of the century. They abandoned the old rules and rewrote the logic of the machine. This gave birth to two ideas that still shape your life today. 1. Money must be controlled by policy, not supply. 2. Governments must run deficits during crisis to survive. The machine didn't collapse. It evolved. Bretton Woods, the new world order of money. By the early 1940s, the global economy was in ruins. The Great Depression had shattered trust in markets. The gold standard had failed spectacularly. Countries had weaponized currency devaluations, and World War II had destroyed entire continents. Economies weren't just unstable, they were dysfunctional. International lending had dried up. Global trade had broken down. Everyone knew that once the war ended, the world would need a stable monetary framework, a way to rebuild Europe and Asia, a system to prevent another depression, rules to keep countries from sabotaging each other, and a currency strong enough to anchor global trade. So in 1944, 44 nations gathered at a hotel in Bretton Woods, New Hampshire, to design a new financial order. The goal was simple: never let the world fall into another depression or a currency war again. The result: the US dollar became the center of the global system. Other currencies pegged themselves to the dollar. The US promised to redeem dollars for gold at $35. Oz, the IMF and World Bank were created to manage the system. On the surface, gold was still the foundation. But beneath the surface, something else was happening. The dollar was becoming more important than the gold behind it. Trust, not metal, was the real anchor. The machine didn't need gold anymore. It needed belief. The breaking point, 1971. By the 1960s, the cracks were obvious. America was printing money to fund the Cold War, the Vietnam War, the space race, global military bases, and a booming consumer economy. Nations around the world panicked. What if the US can't redeem its dollars for gold anymore? Countries demanded gold shipments. The US couldn't deliver. And on August 15, 1971, President Richard Nixon did something irreversible. He cut the dollar off from gold. Not temporarily, not partially, completely. The old world ended. For the first time in human history, every major currency on earth became fiat, backed by nothing but government decree. Gold was gone. Scarcity was gone. Constraints were gone. The machine was now running fully on policy, confidence, and debt. Just as Era 1 made debt permanent, Era 3 made money infinite. A shift so enormous that most people still don't grasp its consequences. Because once money is no longer tied to anything real, once it floats freely, controlled by central banks, once nations can print and borrow in unlimited quantities, the machine can grow forever and never be repaid. The infinite rollover 1971 today, when debt stopped being debt, and became the operating system. When Nixon cut the dollar off from gold in 1971, the world crossed a line it could never uncross. Money began to float freely. Governments could print whenever they want. Central banks could control the economy with interest rates alone. This wasn't just an economic shift. It was a fundamental change in how modern civilization works. The machine was no longer powered by metal, or discipline, or fiscal limits. It was powered by something far more unstable: confidence. And confidence, unlike gold, can shatter overnight. To protect it, governments and central banks had to do something radical, something that defines the world we live in today. They turned debt into money, and money into debt, until the two became the same thing. Era 4 is where debt becomes infinite, permanent, unstoppable, necessary, a system that cannot be paid off, a system that must grow or die. The explosion. Debt goes vertical. Once currencies were no longer backed by gold, a new rule emerged. If the economy slows, print more money. If the economy crashes, print a lot more money. If the system breaks, print everything. In the 1980s, 1990s, 2000s, and 2010s, this rule was repeated again and again and again. Government deficits skyrocketed. Corporate leverage exploded. Household borrowing became normal. Mortgage markets ballooned. Student loans became universal. Healthcare debts became generational. Banks created new forms of credit out of thin air. Derivatives multiplied credit by 10x. Shadow banks multiplied it again. The machine was no longer humming. It was roaring. And every part of the economy depended on borrowing. Governments borrowed to govern. Corporations borrowed to expand. Families borrowed to survive. Banks borrowed to lend. Nations borrowed to avoid collapse. Debt was no longer a tool. Debt was the bloodstream. The big reveal. Debt equals money. Here is the truth nobody learns in school. When a government issues debt, it creates money. When a bank issues credit, it creates money. When a central bank buys bonds, it creates money. And when central banks push interest rates to zero, they force everyone, governments, companies, households to borrow, borrow, and borrow. In other words, money is no longer created by productivity. It's created by obligation. The machine prints liquidity from promises, not wealth, not industry, not savings, just promises. And promises don't end. The era of key. The machine overheats. Then came 2008, the moment the system almost died. A housing bubble bursts, banks collapse, credit freezes, world trade stops, panic spreads. For one horrifying moment, the entire financial machine stopped breathing. Governments and central banks had two choices. 1. Let the system collapse. 2. Or rewrite the rules again. They rewrote the rules. It's called quantitative easing. The Federal Reserve, the ECB, the Bank of England, the Bank of Japan, all of them began printing money electronically to buy government bonds, corporate bonds, and mortgage securities. Not billions, not hundreds of billions, but trillions. The central banks became the largest bondholders on earth, the largest creators of liquidity, the largest lifeline for governments. The machine had grown so large, it was now feeding itself. And the message to every government on earth was clear. We will always buy your debt. Borrow whatever you need. We'll make sure it works. We'll keep the yields low. We'll keep the machine alive. This broke the final constraint, the global loop. Everyone owes everyone. By the 2010s, the world entered a new reality, one so bizarre it feels like fiction. Japan holds US treasuries. The US holds European debt via the IMF. Europe holds emerging market debt via the ECB. Emerging markets borrow in USD from American banks. China owns US bonds. The US relies on China to buy more. Everyone relies on the IMF and World Bank. Global corporations issue bonds bought by pension funds. Pension funds buy government bonds. Governments bail out pension funds. This isn't a system. This is a circular dependency loop. Everyone owes everyone. Everyone funds everyone. Everyone depends on everyone. If one major node collapses, Japan, Italy, China, the UK, the US, the entire global system trembles. The machine isn't national anymore. It's planetary. The new rule, debt can never shrink at this point. Governments discovered something terrifying. If they paid off their debt, the money supply would collapse. Because government bonds are collateral for banks, assets for pension funds, reserves for central banks, liquidity for markets, savings for households, cash equivalents for corporations, if the US paid off its $33 trillion, treasuries would vanish, gives banking collapses, gives pension collapses, gives markets freeze, gives depression. If Japan paid off its debt, the Bank of Japan would implode, gives yen collapses, gives government collapses. If Europe paid off its debt, the euro would lose its foundation, gives ECB loses its assets, gives monetary union collapses. So governments learned a dark truth. Asterisk, asterisk, debt cannot be eliminated. It can only be rolled over forever. Asterisk, asterisk, the machine must grow because shrinking is fatal. What the machine really is, and why no one can leave. For 330 years, this machine grew in the background. Quiet, invisible, unstoppable, era by era, crisis by crisis, generation by generation. It expanded, evolved, swallowed entire economies, rewired the logic of money itself. No war could destroy it. No depression could stop it. No government could escape it. No revolution could kill it. Because the machine doesn't run on ideology. It doesn't run on gold. It doesn't run on technology. It runs on something far simpler, far darker, far more powerful than any currency. Obligation. The obligation to pay. The obligation to borrow. The obligation to tax. The obligation to roll. The obligation to keep the cycle alive, no matter the cost. And every time a society tried to break free, the machine simply rewired itself. Wars forced governments to borrow. Depressions forced central banks to print. Panics forced institutions to intervene. Crises forced nations to unify. Each disaster strengthened the architecture, not weakened it. Debt didn't become the foundation of the modern world because leaders planned it that way. Debt became the foundation because humanity kept choosing survival over collapse, and the machine turned those choices into constraints. Now here we are. The machine is no longer a system, it's a condition. People talk about fixing the debt problem, paying it off, reducing deficits, cutting spending, balancing budgets. But the truth is this: the modern world cannot function without permanent debt. Not the United States, not Europe, not China, not Japan. Debt is not the flaw, debt is the architecture. Debt built the roads you drive on, funded the wars your textbooks talk about, created the cities you live in, paid for the governments you elect, backs the money in your wallet, supports the institutions that support you. If the world actually paid off its debt, the money supply would implode, markets would vaporize, banks would freeze, trade would collapse, governments would fall. This is the paradox at the heart of the machine. Debt is the problem. Debt is the solution. Debt is the prison. Debt is the escape. It is every contradiction woven into one framework, and we are all inside it. The machine doesn't need permission. It doesn't matter who wins elections. It doesn't matter what ideology they believe. It doesn't matter what policies they promise. Every administration inherits the same reality: borrow or collapse, intervene or crash, print or burn, roll over or die. Left wing, right wing, nationalist, socialist, capitalist, it doesn't matter. The machine is indifferent. It simply demands liquidity, demands confidence, demands that interest keeps flowing upward, demands that the cycle continues. And the cycle will continue for one reason: there is no alternative framework for the modern world. Not yet. Every attempt to build one has failed. Every attempt to escape has collapsed. Every attempt to return to the old world gold standards, balanced budgets, limited credit, lasted only until the next crisis. Then the machine grew stronger. The final truth? You can't escape a system you're built on. We look at the $315 trillion of global debt and ask, how do we get out of this? But that's the wrong question. The right question is, what happens when the machine reaches its limits? Because it will. Throughout history, every system has reached a breaking point. Rome's tax system failed. Feudalism unraveled. Mercantilism collapsed. The gold standard fell. Bretton Woods came to an abrupt end, and when systems collapse, they never go quietly. They break violently, suddenly, irreversibly, not because people want them to, but because the system stops being able to support its own weight. No empire lasts forever. No monetary regime lasts forever. No economic paradigm lasts forever. Not even this one. One day, this machine will malfunction. One day a crisis will hit that no amount of printing can hide. One day, the cost of maintaining the cycle will exceed the cost of letting it collapse. And when that day comes, it won't just be an economic shift. It will be a civilizational pivot. The end of one world, the birth of another. The debt machine isn't history, it's the present. The next era hasn't begun yet, but we can see the pressure building, nations drowning in interest payments, central banks trapped by their own policies, financial markets addicted to cheap money, governments unable to stop borrowing, populations losing trust, inflation returning, deficits exploding, global tensions rising, debt structures creaking under their own weight. This isn't normal. This is the sound of a system reaching saturation, the sound of a machine that must grow forever, in a world that cannot be ending the machine never expected. Here is the final, uncomfortable truth. The machine was never supposed to exist this long. It was built to fund a war in 1694. It was jury-rigged through crises. It was patched together through depressions. It was supercharged by central banks. It was globalized by finance. It was unchained by Fiat. It was saved again and again by intervention. It wasn't designed, it evolved. And anything that evolves can mutate again, which means the question isn't, can we shut it down? But, what will replace it? Another monetary system, another reserve currency, another set of rules, another kind of money, another definition of debt, another operating system for the world. Because when this machine breaks, something else will take its place. And that transition, not inflation, not recession, not a debt ceiling drama, that is the story that will define this century. For 330 years, humanity has been living inside a structure built on perpetual borrowing, infinite rollover, and fragile confidence. We didn't choose it, we inherited it. And now we're reaching the point where the machine can no longer hide the cracks. If this video helped you see the world differently, if it made you look at money, debt, and power with new eyes, then you, restarting to understand something essential. Debt, ISNT, the flaw in the system. Debt is the system. And when this machine finally breaks, it won't be a financial crisis. It will be a civilizational turning, the end of one world, and the beginning of whatever comes next.